One thing I would add is that Wyoming in the U.S. has been one of the most progressive jurisdictions for basically trying to be a hub for this type of activity. And so they've been spearheading, say, Bitcoin banking. They've been, basically being the place to bring Bitcoin, Ethereum, all these other kind of, places. So along with Miami, that's also been kind of vying for that role lately. It's one of the handful of hubs that are, kind of more on top of that than other places. We've also seen, for example, Kentucky has tried to attract miners in
Miners.
some ways. And so, a couple of these states or a couple of these cities have spearheaded that. And so that is kind of something to keep aware of, that you have these somewhat of a jurisdictional arbitrage where some places can be more hostile to it. Other places are saying, hey, then come here, then we have cheap energy, or we have friendly Bitcoin banking, kind of jurisdictions, stablecoin allowances. I think there's a couple models here. So there's like the Chinese model of, say, central bank digital currency, top down, trying to push out competitors.
Right.
Some people in the United States are kind of trying to focus on another direction, which is for the U.S. to harness the private sector as much as possible for their monetary policy, to basically have a regulated set of stablecoin providers, and basically to use that kind of private sector technology as much as possible when relaying their various policy objectives, rather than kind of resorting to that more Chinese model of having, Fed coin, for example, and then, pushing out other competitors. And so I think that's going to remain an ongoing question for years. I think as we go forward, to see what is allowed by regulators, what is not. There's all, certain things like Binance offshore exchanges or Tether, those types of things being more frowned upon, whereas things like UDSC, like, Circle, and some of these, say, Wyoming-based entities, because they're going through the more kind of official process, they have a higher chance of being kind of accepted. We also saw, for example, that some of the initial coin offerings of 2017, they came under regulatory fire for, unlicensed selling of securities, whereas now, for example, we saw Stacks 2.0. They saw what happened to those other ones, and when they came out with their offering, they went through the full regulatory process of basically selling securities. And so I think over time, as certain protocols are made example of, there's been more of a shift to try to do things above board as much as possible.
Any opinion on the Ducat, by the way, is built on EOS. Do you feel EOS, as I call it, EOS, is centralized?
I view it as centralized to a significant degree. That was one of the popular coins of the 2017 bull run. It's not in the top 10 now. Last I checked, it's one of the ones that's lost some of its luster, but it's still obviously a functional network. It's still used heavily in the crypto gaming space. And so overall, I think one of the risks of most of these blockchains is that they can have the appearance of being more decentralized than they are. And so I think when you start, say Bitcoin is arguably the most decentralized in terms of, not just in terms of node distribution, but in terms of, say, the breakdown of powers between nodes and miners and developers, and kind of, there's really no kind of central Bitcoin company that can just change things. Then Ethereum's, I would say less decentralized than Bitcoin, but say that's still more decentralized than something like Tron or EOS. So there's certainly a spectrum here of how decentralized these protocols are. And as you get out of the top couple coins, you generally shift more towards centralization in one way or another. It doesn't necessarily mean that the coins are concentrated in the hands of a few, but it could mean basically the ability to change the protocol is easier to do, or somewhat more centralized than some of these other protocols.
Do you think that Solana could be the next Ethereum?
So it's possible, right? But again, they're making sacrifices in order to increase transaction throughput. And so one of the challenges of Ethereum is that they're a second generation coin, trying to make changes while running to be a third generation coin, while these other coins are coming out as third generation coins. So Cardano, Solana, like these other coins are coming out with these changes in mind that Ethereum's already kind of shifting to. Now, the problem is if you try to do too much on the base layer, you make sacrifices. And so, for example, if you want to run a Bitcoin node, this laptop that I'm talking on, I could run a Bitcoin node on it. Whereas, like, I could not run a Solana node on this laptop. It's a more kind of high end thing. It's not really something that is it's more enterprise grade, you could say. And so that's the thing is once you get up to coins that are trying to have a lot of throughput on the base layer in terms of how big the blockchain can get, how much how much bandwidth internet you need in order to keep track of all the transactions, keep your node synced. Those become more industrialized. And again, that is one of the variables of decentralization. That if you have to have a very high bar for being, an operator of that network to be able to verify the supply or to be able to contribute to some way to the blockchain, uh, you know, that centralizes it. And so there is kind of every variable in blockchain space, there's always a trade-off. And so it kind of matters what that protocol is optimizing for. And that's again why I kind of separate Bitcoin from these others, because they're all optimizing for different purposes. And so that's why some of these I don't view as direct competitors. Whereas, for example, Ethereum and Solana, uh, uh,
Right.
Binance Smart Chain, those are more direct competitors. And so things like stable coins or smart contracts can spill over to whatever is cheap, being highly used. So it has a network effect. And so I think the biggest challenge for Solana is they are up against the biggest network effect in the space, at least in the smart contract space of Ethereum. So there's kind of, older tech but bigger network effect versus newer platform but smaller network effect.
And I don't know if it's something that you've done some research on, but like NFTs kind of came from nowhere last November and December. Are social tokens the next NFTs?
We've seen it. Yeah, we've seen a few rounds of this. So, if anything, the earlier kind of popularity of NFTs was a game called CryptoKitties back in 2017. That was
Mhm.
kind of the fad of that cycle where you could. It's almost like Pokemon. Like you could trade these little digital cats. They were funny looking, and it was actually such a big thing that it actually clogged up the Ethereum block space for a while. It drove transaction fees up because so many people were trading these cats, and so obviously that faded away. But we saw the round two happen this past year with the same kind of the same idea being applied to digital artwork, and I think overall, the market's going to keep trying things until it sticks, right? Which is natural. And so CryptoKitties didn't stick. NFTs will, that's yet to be seen. That's we haven't, we certainly hit kind of a bubble phase there. It cooled off. It remains to be seen how much that's going to stick. Social tokens are another thing. I don't have a strong perspective there, but I do think that this when investing in the space, basically it's one of those things. There's going to be a lot more misses than there are hits, but some of the hits can be very, very big. And so it's one of those things where the space it can be scammy, it's prone to failure, but there are a lot of well-meaning projects out there that are trying to apply software to things that previously software is not applied to. So I don't have a strong conviction on that, but it's something to watch.